Hi, welcome back to another edition or installment, if you will, from Flex Capital regarding business to business finance. Today, we're going to talk a little bit about credit. What is it? How does it work for you? That sort of thing. I know we all know a little bit, but I'm just going to try to add a little bit to maybe enable you or equip you better for what's going on in that world and how having good credit is going to help you that much more. So, credit is basically the demonstrated ability to obtain services or products prior to making payment. So, the trust that you have from someone else that payment will be made both in full and in a timely manner is kind of what we're talking about there. So your credit score is basically a grade card for showing your historical ability to do that, or your track record, if you will, for having done that. So credit is being used, credit score is being used more these days in other avenues too, such as a common one is insurance. So why does your insurance company need to know your credit score or get a credit rating on you? Is because there's an algorithm in there that allows them to determine the likelihood of someone making a false claim. So you'll probably see, or I would expect anyway, and it's only my opinion, but I expect credit scoring to be used in many other avenues, many other businesses as well. I know most employers use it as well. They want to know who they're hiring and what their habits of the person they're committing to are. So there are basically three credit categories that will help you to establish or manage, and there's also three primary credit bureaus. The three categories are going to be open accounts such as utility bills, gas bill, things of that nature, things that are going to change each month, but you are expected to pay in full each month. Those are going to be your open accounts. Installment accounts will be more of the term-based accounts for an automobile purchase or a home or something like that. So you're going to know going in, how much is this going to cost me each and every month to own and purchase this product. And then you have revolving accounts, which are going to fluctuate, but you don't have to pay the full amount, such as a credit card or a gas card or something of that nature. You'll have the ability to pay less than the full amount, but you're going to pay for it. So they're going to charge you an interest factor on the remaining balance each time. Some of those can get fairly high, so you might want to be concerned about that. I know I always am. How important is your credit score? Significant. It's vitally important. And again, understanding it, understanding how to manage it and improve upon it is something I'll try to enlighten. There are three bureaus. There's TransUnion, Equifax, and Experian. Now, what we work in, or the model that we work in, is primarily business loans. And the majority of the people in our area are concerned more with the Experian line than they are the other two. Doesn't mean they don't consider the other two, but they focus more on what Experian has to say. In the automobile world, they're going to look at Equifax or TransUnion. In the home, they're going to look at all three and look at a blended matrix. So speaking from that, each one is going to report things differently, and you'll want to learn what they're doing so that you can manage and control your own credit that much better. With regard to the open accounts are probably the easiest way to establish a good credit rating. Make sure those utility bills get paid in a timely fashion. Or early. Make sure that your credit card bills are paid at more than the minimum, and that you understand that as you continue to grow your credit worthiness or your score on your grade card, you can ask for greater amounts of credit. Those will help. You don't want to charge them all up and leave them up. You'll want to show that you're managing that balance well. But with regard to open accounts, so one good habit, something I try to do, is when I receive a bill, maybe I receive that bill on the 7th of the month, it's last month's electric bill, it's not due until the 20th. I'm going to probably set up on my computer, managing my bank account, that I want that bill to be paid and sent on the 14th. So I receive the bill, I go into the computer and I set it up to pay that bill on the 14th. Then I know it's there in plenty of time and early, and it's paid in full, and I've set aside the money to do so. Flip side, I get that bill on the 7th, it's due on the 20th, and I decide I want to hang on to my money as long as I possibly can. So I put a note in my phone to remind me that on the evening of the 20th, I need to go online or call them and pay that per debit card or whatever out of my account at that time, so I've held my money. And on the morning of the 20th, I receive a phone call from my daughter who's away at college, and she is panicked about something. Maybe she can't find a sock or something like that and needs her father. And so I load up the truck and run to the campus and take care of her needs. And therefore the phone message comes through, and I'll have to deal with it tomorrow. I've put it off. Now I'm late. They're going to charge you a penalty, or me a penalty, and they have the right to report that to my credit bureau. Now, will they do it in one day? Probably not. Will they do it in 3 or 4 or 5 as an open account? They probably will. Some of the others give you a couple of weeks. Some give you a month. Open accounts, you want to make sure those are paid plenty of time. So that's one way to secure and manage your credit. I don't want to go into a great deal more about it. Credit is vitally important in dealing with business loans as we do. And the scoring table is now from 300 to 900. And I'll just give you a brief synopsis. Basically, if you're under 450, you've got really poor credit. It's very difficult to purchase anything. Those who can get something purchased or will extend you credit will charge you fees up front and will charge you exorbitant rates of interest. 450 to 530 still considered very low, still a very difficult task. Lots of hoops to jump through. Can it happen? Yeah, probably not in the business world. You get into the middle 5s up to the low 6s. Yeah, there are some lenders I can work with. It's difficult. There's a lot of stuff and you're going to pay for it. Okay, you're buying the opportunity to buy whatever it is you want to do and to rebuild your credit. Above roughly 630 to 680, you're kind of right in the middle. We can do some things. We may not get all the term we want. We may not get the best rate, but we're going to be able to do things. 680 to middle 750, you've got good credit. You've done a good job of managing your accounts and paying your bills, and they're going to reward you for that. Above 750 to roughly 850, you have excellent credit, and you can do most things. Obviously, you don't want to step outside what you can afford, but beyond that, you can buy about anything you've shown an ability to pay for. Above 850 to 900, you're close to walking on water. You have near perfect credit, and they are more likely to step outside the normal boundaries to help you put a deal together and give you the best possible rate and term on that. That's about it for the discussion on credit today. Again, if you have other suggestions, these come from our suggestions box. We'd love to hear from you. Please like and share and subscribe to our channel. We'll be back with more. I appreciate it. Thank you, Flex Capital.